morning, ladies and gentlemen, and welcome to our webinar today. It's my pleasure to welcome you to our ESG and Capital Markets webinar. My name is Elizabeth Ekpo from PwC Nigeria. As you are aware, in today's world, ESG, sustainability, net zero, and similar terminologies have become buzzwords in today's global economy. And this has prompted debates around not just the risk and opportunities of transition to net zero, but also debates around the capital that is required to finance this transition, especially for developing countries whose most activities and revenue is generated from activities that are considered non-green in nature. But there's also debates around reporting and disclosure obligations to preserve the integrity of the market, for appropriate stewardship, and also to avoid greenwashing. Over the years, we've seen the proliferation of various standards by regulatory bodies and standard setters. And how do these standards bring alignment and also help the stakeholders report on their claims on sustainability and greening? And so it's on this premise that we have themed today's webinar, the role of the capital markets in the transition to a lower carbon world. And today you see that we have a good lineup of speakers and panelists who will be involved in this conversation. We hope that the discussions today will be very enlightening and useful, and there'll be useful takeaways for you as you begin to apply these strategies in your various businesses and operations. We also trust that you'll be able to understand the way which PwC can help you in this transition to net zero and to a lower carbon world. So because you didn't come to hear me speak today, we'll be going straight to the meat of the event, and I'll be bringing up our first speaker for today. But I'll also encourage you to be part of the conversation by using the chat box for your comments and questions. And we'll also like to know your name and where you're joining us from. And so our first speaker really needs no introduction. He's someone we all know. He'll be coming to speak on what's important for the Nigerian economy. And he's a partner and chief economist of PwC Nigeria. He's no other than Dr. Andrew S. Nevin. Thank you very much.
Thank you, Elizabeth, for such a kind introduction, and thank you to all of our esteemed panelists today and to all of our esteemed guests. Really delighted to have you join us. I was very pleased to see today that they had the Economist only speaking for five minutes. So let me just say why this is so critical, why this is important to the Nigerian economy. So we, at PwC, for the past 5-7 years, we've tried to put the big issues on the economic agenda in Nigeria. And one of those issues is the development of the capital markets. We've consistently said while the banking sector is critical, and we have so many high-quality banks, a well-governed sector, the development of Nigeria is really not going to be due to the banks, because the banks, the way they deploy capital is short-term uses of capital. We need infrastructure, we need power, we need industrialization, so we need longer-term capital. And the only way that's going to happen is the development of the capital markets. That's a theme that we've been talking about for many, many years. And I'm very happy to say that the SEC and the industry has just come out with a new capital markets master plan to help drive this and have a much bigger capital markets, 5 to 10 times bigger than we have today in the next 5 to 10 years. At the same time, you ask, what should we be financing? And I think one of the things that I hope we can all agree on is we're in a climate emergency. When you look around the world today, just literally today, we have climate problems in the United Kingdom, in Portugal, we have a heat dome in the United States. Last week we had flooding in Sydney, significant flooding in Sydney. We can see the impact of the carbon that we put into the atmosphere every day. So the question is how to tackle it. And of course, regulation is important, talking is important, political movements are important. But at the end of the day, what happens in the economy depends on where capital flows. So if we bring together the ESG agenda, which of course is climate, but also the social agenda, good governance agenda, together with the flows from the capital markets, much bigger flows in Nigeria, that is the most important thing that will develop Nigeria properly in an inclusive and sustainable way over the next weekend. So I'm delighted today to see, after us talking about these themes for the last 5 years, that we're bringing them together in such a critical event where we're combining the capital markets with ESG. So I look forward to a great event. We have fantastic speakers and panelists. And again, I just want to thank everyone who's joined us today to be part of such a critical conversation. And please keep the comments coming. They're a big part of making this a success. So thank you. Elizabeth, and of course, Elizabeth, everyone wants to hear you. You're the next gen, so come back.
Thank you so much, Doctor. And thank you for setting the tone for the event today. Really important as to where capital is flowing, and it's important that this capital actually flow to address the climate change agenda, which has become a critical component from today's global economy. And so our next speaker I'll be bringing up will be speaking on financing the transition towards a low carbon economy. And she's a partner and the head of sustainability and climate change leader in PwC Nigeria. And she's no other person than Rukaiya El-Rufai. Thank you.
Okay, thank you very much, Elizabeth, and good afternoon, everyone. While I put up the deck, let me seize this as an opportunity to thank everyone for making our time to join this very important webinar. Okay, so I'll make it snappy. Okay, so I mean, let me just go straight into the deck. So historically, we've developed our economies to be carbon intensive. So there is now a shift towards building net zero economies. So what has happened is we have created economies in a linear way. We do not, try to think of how, our economic activity is affecting nature, the social impact, and also there is now a call to balance, achieving accelerated growth, and development in a low carbon intensive way. And I can say that, there's some countries that are showing it's possible. At PwC, we do this net zero economic index for the G20, and the people leading actually are the likes of Indonesia. And I do remember Indonesia. So they are able to grow while lowering their carbon intensity. So now coming back to Nigeria, I mean, we're highly dependent on fossil fuel. Of course, we have emissions from that and, other sectors. But the thing is, we do want to achieve accelerated growth and development. So how do we ensure it's a low carbon development? And of course, there is the whole discussion around just transition. And, it's very important. Africa Development Bank is pushing towards this, because when you look at the projection of Africa, the fact that by Nigeria, especially by 2100, will make up a significant chunk of the population. And, Africa can't be, we just have to join, that net zero, journey, in our economic growth and development. So when you look at the statistics in terms of, which sectors are emitting the most, you can see the first is land use, change and forestry. I mean, we're very agrarian. And when we look at use of energy with especially cooking, in as much as it sounds fundamental, because when you look at it, it's about lives and how we live our lives and go about our livelihoods. There is a lot of burning of wood and all that. So of course that comes with deforestation and all, and of course energy, because I mean, we do know, the power deficit, insufficient power, and people have to augment. And of course, diesel, fossil fuel power generators are actually still dominant, and waste is a big issue. And even agric, because there is, sustainable agric that we can deploy better to be able to, meet our food security needs without degrading, the soil, for example, and, in a way that it adapts to climate change, because we do have floods, we do have droughts, and of course industrial. So when you look at it, you would see that, these are, potential areas for deploying capital, for carbon avoidance or, mitigation. So coming to energy, because it's crucial, in addition to land use change and forestry, you can see that in terms of annual consumption, residential is the biggest, and you can see that, 53% of our energy comes from biomass, and 31% comes from oil, and then 80% of electricity is from diesel. So you can see energy transition is a critical part of the story. But like I said, it has to be just, because we're now seeing what is happening from the Ukraine crisis. I mean, the energy transition wasn't sustainable, because now with the shock and the black swan risk crystallizing, it's triggering economic impact, it's triggering social impact, and that's why you have to strike the balance. You need to provide accessible energy and affordable energy, and that, but you can also try to do that with low carbon pathways. When you look at, we are endowed with renewable sources, solar, hydropower, and all that, and of course capital needs to be deployed, in this manner. So in terms of trends we're seeing from the financial sector, towards decarbonization, of course, climate change and net zero. There's a whole lot, of how to manage, how to adapt and mitigate to physical risk, transition risk, liability risks, all in a bid towards limiting global warming to 1.5 degrees above pre-industrial level. But what we're seeing is that movement of greening assets and finance. It's the potential is just so huge, and you have net zero transitions, companies committing to net zero, that is triggering a very buoyant market of carbon trading. You do have the providers of programs that get carbon credits, and you do have companies committing to net zero that are actually buying the offsets. So that's a huge trend that would enable the cap and trade regime around solving greenhouse gas emissions. Of course, gender diversity, women empowerment. I mean, it's so difficult to access some of these climate finance, green finance, because it's estimated women would be further impacted. There is COVID-19 recovery, of course. Then companies are also, the sector is trying to align with global priorities, with national priorities, especially the nationally determined contributions. I mean, stock markets are being rallied. Regulators are all passing regulations, to see how capital can be deployed, in countries, to ensure, that alignment with the NDCs and the SDGs and the Paris Agreement. Then, of course, we're seeing regulation and partnerships. So it's a course. The partnerships are so important, and we are definitely seeing very encouraging ones, because it's about a course, I mean, we're in an existential threat. The climate crisis is real, and it's definitely, some. So, what instruments are being used, and how can, financial be deployed, to unlock value through green and sustainable instruments. I mean, the Nigeria is an early adopter of green bonds, climate finance. There's been 4 issuances, is it 3 or 4, and then 2 sovereign bond issuances. And in 2021, the global market grew, and it has reached $1 trillion. It's so huge that many countries are even forming taxonomies, and frameworks to guide what would be an eligible project for green bonds and the likes. And you also have sovereign issuers growing as well, and of course Europe and America are leading, and you can see Asia Pacific thereafter, and you can see rest of the world, of course, of which Africa is a chunk. So the potential is huge. Another critical one is the blue economy, which for Lagos is also very important, with tackling plastic pollution especially. So in terms of specific instruments, you have social bonds that tries to marry financial returns with social impact. You have green bonds that helps with the greening and the decarbonization. You have green loans. You have blue bonds that aims at, blue ocean, that's water, life, and in line with the SDG on life below water. And you have sustainable bonds as well. So in terms of, and this is to conclude on what the future holds, is about green and inclusive growth. And of course, for decarbonization is about, green growth. And of course, for developing countries, it's that dilemma to strike the right balance to achieve that, accelerated growth and development and poverty reduction, while we also balance it with nature. I do believe we have, a greenfield opportunity. We have leapfrog opportunities. We're just developing some of our sectors, so it's important it becomes, a lens. And of course, sustainable finance has shifted, beyond, responsible investing to more core things about asset management, ownership, and it matters a lot to investors. And of course, the emergence of sustainable finance, as a major part of the market, signifies that there is a surge there, and there's a huge market potential, going forward. And I mean, to conclude, we do have a lot to gain, by going the green pathway to developing Africa amidst just transition, considering our peculiar needs. So thank you. So Elizabeth, back to you. I'm not sure if we're taking the Q&A now, but yes, back to you, Elizabeth.
Thank you very much, Rukaiya. We're not taking the Q&A now, but we do encourage our participants to put in their questions and their comments in the chat box, and we'll take them, I think, at the end of the panel session. Thank you very much for those insights. Some things I really got was, especially with the Ukraine and Russia crisis now, and how some economies are having to reopen their coal power plants because of the issue with Russia and getting energy from there. So it's really important that this financing thing is actually tackled, and the capital market plays a critical role in that channeling of capital, so that economies can begin to have adequate energy resources and transition properly to low carbon world. And also something that you mentioned about the regulatory framework. I mean, it's good to see that Nigeria is at the forefront of that. the Securities and Exchange Commission has already come up with rules on green bonds, social bonds, as well as sustainable bonds. And so that really forms a regulatory framework. And we now begin to need to know how corporates and organizations can begin to tap into that to finance their transition, and how the capital markets can help them in that transitioning. So thank you very much. And at this point, we'll be going into the keynote speech for today's event. We'll be calling upon our keynote speaker, who will be speaking on the topic, the role of the capital markets in the transition to a lower carbon world. Our keynote speaker is Ekpo Adekoya. He's the Group Director, Sustainable Finance and Investment Strategy from the London Stock Exchange. The Ekpo leads the London Stock Exchange Group work in solving industry-wide challenges around ESG, whilst also advancing and implementing the group's sustainability strategy. He works closely with external stakeholders, cutting across commercial, policy, regulatory functions, and businesses. Prior to that, to his role as the Group Director of Sustainable Finance, he was the head of emerging market strategy in London Stock Exchange as well. And his focus was on India and Africa. He began his career in LSE from the equity listing business covering South Asia, Middle East, and Africa. He's also the co-founder and director of Restitution Capital, an impact-focused litigation fund working with anti-corruption focused government to return stolen assets to reinvest in impact projects accretive to GDP growth. He's educated in Bath. He was educated in Bath, United Kingdom, and holds a Bachelor of Science degree in mathematics. So at this point, I'll be handing over to our keynote speaker, Ekpo. Thank you very much.
Elizabeth, thank you very much. Good morning, and thank you very much to all the PwC team for allowing the London Stock Exchange Group to address your clients and your business associates. The first thing I have to say is that impeccable PwC training from both Andrew and Rukaiya, managing to keep their presentations spot on. I was looking at the timings. Andrew, you finished yours at 10:07. Rukaiya, you finished yours at 10:20. So I'm going to try and do the same and keep my timing in tandem with yours. But I have a presentation to share with you, and really wanted to, I suppose, thrash out here what the opportunity is for both Africa and Nigeria in relation to capital markets becoming a key enabler for this transition to a lower carbon economy. And so I'm going to share my screen, and hopefully that will happen without any issues. Elizabeth, you've frozen for me, so I'm hoping that I haven't frozen for everybody else. Let me just share now.
No, I can see.
You're good. You're good.
Very good. Excellent. Okay. So hopefully you can see this. Can you see my screen?
Yes, please.
Okay, great. So let me pop that into presentation mode. There we are. So on this topic of mobilizing capital for a sustainable economy, it's probably incumbent on me to give, at least just initially, some of the efforts that London Stock Exchange itself is doing in terms of its role as a convener of capital and indeed a financial services and data company. So we are one of the first global exchanges that committed to a net zero policy. So we signed up to an ambitious 1.5 degree race to net zero, and we've also halved our emissions as a group over the last 4 to 5 years. We're a supporter of the Task Force on Climate Financial Disclosures, and we have been very much encouraging the issuers of our markets to follow suit. But in that sense, as an issuer on our own market, we too are fully TCFD aligned. We're one of the founding signatories of the UN's Principles for Responsible Investment, which now has nearly $120 trillion worth of assets under management. And we've launched a number of very significant initiatives that look towards creating data that can be used by investment professionals to make those key decisions around climate change, social and governance matters. So just with that as a backdrop, I wanted to, before I go on to the first slide, just ensure that everyone is aware of the challenge that currently exists for Africa. So according to ARENA, so the International Renewable Energy Agency, approximately $100 billion per annum of investment is needed directly into renewable energy projects across Africa to meet net zero targets by 2050. That annual number is needed for the next 10 years. So that's $1 trillion worth of investment. So just to put that annual number into context, that 100 million or 100 billion is more than Africa received in 2020 in remittances, overseas development assistance, portfolio flows, and foreign direct investment. So this is truly a monumental challenge that is in front of us. And as we know, and we're all familiar with these stats, Africa's population is due to double to 2.5 billion people by 2050. So we face the prospect of nearly 30% of the world's population relying on high carbon power generation sources, which will almost certainly mean that the world will miss its temperature targets of 1.5 degrees and 2 degrees unless investment starts now. And as we've seen, and as Elizabeth mentioned, the Russia-Ukraine crisis also highlights the need to reduce our reliance on major fossil fuel producers, but also to accelerate the shift to cleaner and more local sources of energy. So this quantum of cash that I talk about is literally impossible to reach, even for the DFIs. So it will require private capital, predominantly through capital markets, which have transparent frameworks, orderly functioning markets that allow for the efficient allocation of capital in that sense, in addition to other sources. But it requires government to also be involved, and I'll touch on that as we go on. So just to quantify what's happening in the global institutional world, investors have been changing their mandates towards global initiatives such as the UN's Principles for Responsible Investment for years now. And you can see what that's done. Since 2008, we've seen global AUM, or assets under management, that incorporate some form of ESG mandate rise from 6.8 trillion to nearly 40 trillion. And by 2025, that number is set to be 50 trillion, which will be 1/3 of all assets under management. Pension funds, mutual funds, insurance funds will have some form of ESG mandate linked to it. Now, my concern as a proud African is that Africa ensures that it has its share of voice within that capital. And how will that happen? That will only happen if we understand the seriousness of this problem, and if we understand the efforts that are being made on a global scale to meet these challenges. Let me just quantify a couple of those challenges. So these investors that we talk about, they're due to spend £8 billion next year on ESG data that can support their capital allocation and deployment strategies. The companies themselves, so companies listed in London, in New York, in Japan, in Lagos, they're due to spend a huge amount of money on compliance. In the European Union alone, nearly $6 billion will be needed to be spent by companies to create ESG data that is compliant to new EU regulations, such as the Corporate Sustainability Reporting Directive that's due to come in next year. So these shifts are happening, and therefore my message today is that the data that supports these investment decisions is as crucial as the projects that need to be developed, and they must be done in symbiosis. Now, capital markets are definitely the right place for that. And we can see that from Rukaiya's slides earlier, we're making great progress in Africa and Nigeria, predominantly debt-focused products. But there are a plethora of products these days that are supporting ESG initiatives. So in London, and I've just taken a snapshot here of what we have on the London Stock Exchange. So we have over 100 ESG indices, which are supported by data from companies. And these cut across the green economy, carbon emissions, carbon reserves, and green real estate, as an example. We launched a bond market back in 2018, the sustainable bond market, which has now raised about $140 billion for companies across social bonds, across different types of sustainable bonds, green, transition, etc. We have 250 plus ESG ETFs, which are, of course, derived from the ESG indices, which create underlying baskets for low-cost investment and more passive type investments. There are 34 green funds today with a value of over $20 billion. So these are green equity funds, which collectively pool projects together to be funded by a single sponsor. And then we have 100 plus green economy companies, which I'll go on to later. So these work in developed markets on the basis that developed markets tends to have the prerequisite regulation, transparency, governance, and liquidity. My fear is that in Africa and in Nigeria in particular, we are still trying to get to the optimum level of those three things to create the right balance of investment to come into the country. So one of the things that I'm keen to mention today is that obviously there are still issues on financial depth based on policy and regulatory gaps, liquidity issues that are based on, for example, the ability to attract sustained foreign portfolio inflows. So the thing not to do in Nigeria in particular is to just create more and more and more product, because you will find that what happens is that essentially you have products, but you have no liquidity in them, and the market loses confidence. So if they're listening, I implore Oscar, Temi, and Coco, don't enter a product war and start developing all of these major products. Stick to the basics, the bonds that are there, but start to develop and collaborate together policy and policy direction that will support the trillions of dollars that are waiting for the low-cost carbon opportunities that exist in Africa and in particular in Nigeria. Now, what are those policy issues? LSE has spent a lot of time developing these policy ideas, which are and have been endorsed by Mark Carney, who is the UN Special Envoy on Climate Action and Finance. And we believe strongly that these policies are a key for ensuring that a country like Nigeria will receive its fair share of the investment capital that's out there. Let's just run through them really quickly. Number one is to encourage domestic disclosure frameworks on an economy-wide basis. So, and to do that by 2025. So what do I mean by that? That means a minimum of creating a disclosure environment where companies should report in line with things like the Task Force for Climate-Related Disclosures and potentially the International Sustainability Standards Board, which has just recently been developed. And why? It's important to have global consistency on information on a sustained basis and across companies' credentials. It's also important to start to introduce those behaviors and practices for private companies, the aspiring businesses that may either list or indeed not list, but would otherwise be excluded from this capital that we know is out there and is available. So these should be at least best practice, if not mandatory. Now, the standards are there, they're available to be copied and to be inculcated into the regimes, both policy and mandatory regulatory regimes in Nigeria. So that's our first point. The second point is what we call the requirement of companies to disclose the revenues that they derived from products and services, which adds to the green economy. So, for example, where a company has a service which drives and develops some form of carbon reduction activity, would qualify in London for something we call the green economy mark. And the green economy mark is given to companies listed on LSE's market where at least 50% of their total revenues contribute to activity in the green market, such as pollution reduction or waste mitigation and other things in the circular economy. It requires a taxonomy, which again is a shift and an advancement that needs to be considered. But again, there are many examples of taxonomies. So these are different activities qualifying to allow for companies to say that their revenues have developed. In London, our taxonomy covers 10 different sectors, about 64 subsectors, and offers a really, really granular view of green activity. We can start small in Nigeria. We can start with a very, very closed environment that creates at least a platform for developing that. Now, what's the upshot of doing that? Why should we do it? Well, let me just show you this, which is quite insightful. So our green economy mark companies, since we've been establishing that mark, have completely outperformed the FTSE All-Share in London. So it's a sizable, statistically viable set of companies. It's roughly 150 companies listed in London out of 2,000. They have a market cap of over 250 billion US dollars. And as you can see, over the last 5 years, there's been an outperformance of the GEM companies from the FTSE All-Share of about 115%. And that chasm is growing wider. So we advocate the development of these disclosures of revenues that are derived from green services for all companies across Nigeria. The third point to mention here is the mandating of what we call transition plans. So that is mapping out very, very clearly how you as a company intends to get to net zero. What are the steps and measures that you will take? Publish them and indeed adhere to them so that investors can see what part of the curve you're on and the extent to what strategic decisions you need to make next to enable them to deploy capital into the companies. So transition plans have become a very, very key factor of programs such as the GFANS program. So that's the Glasgow Financial Alliance for Net Zero. It's very much part of the actions of things such as Climate Action 100. Investors are looking for that strategy. Even if you don't have today data to disclose, what is your plan for disclosing that data later on? Now, a lot of this information is potentially captured in sustainability reports and annual reports and other things, but having and publishing a standalone transition plan is a lot more visible and makes a lot more sense. And the final thing I want to say on this is that we are very strong advocates of the development of voluntary carbon markets, which sit inside the capital markets infrastructure or framework. And Rukaiya alluded to them earlier. And in London, we've developed a specific market called the voluntary carbon market. So this is not a market trading carbon credits or certificates of emission reduction or voluntary emission reduction certificates either. This is a market that actually funds projects that themselves are eligible to issue certified offsets. And essentially what happens is that we use our skills and our attributes, which is convening of capital, and we give companies the option to pay a cash dividend to their investors or to pay for those that are engaged in that activity a carbon credit instead. So we call that a dividend in specie, where investors can now actually immediately buy an offset product. Now, this is quite interesting if you think about it. And I use the example of Netflix and Nigeria. So Netflix is a listed company in the US and finds it very difficult to find ways to reduce its emission reductions. Now, if it were to buy into a company that were listed on this market, it would receive an offset credit, which it could retire, or indeed, if it was in excess, it could trade on a carbon trading platform. This is innovation that's happening in London that we again encourage to happen in Nigeria in terms of development of market ideas. Now, there's one challenge that faces us all, which many individuals that I speak to on my day-to-day business aren't aware of. And I noted in Rukaiya's presentation that she showed that approximately 32% of Nigeria's greenhouse gases, 32% of Nigeria's emissions rather come from energy in energy that produces greenhouse gases. Now, that is a huge percentage. So today, the solution, the mitigation, is to develop renewable energy projects, so solar, wind, geothermal, etc. If you were to have a project in Nigeria today that did that, it would be virtually impossible to issue a carbon credit against that, because the UNFCCC, which is the UN's body that deals with this type of matter, the various industry bodies such as Vera and Gold Standard will not issue a carbon credit in a middle-income country unless it was a LDC country. This is a policy issue that's a legacy from low carbon prices many, many years ago. So again, a policy drive that all exchanges and all capital markets participants across Africa should be involved in today is to ensure that there are legitimate instruments that can be issued off of the back of renewable energy projects in country. So whether that's in Kenya or Egypt or Ghana or South Africa, which all fall under that definition, there's a reason for collaboration between all parties. So I'm going to just come back to the policy recommendations very quickly and just state really that it's absolutely imperative that as we move forward, that we see that there's a balance between policy and product in order to meet the needs of people, planet and profit, as we've seen those challenges being developed further and further. And we stand by our partners at PwC, Nigerian Stock Exchange and FMDQ to work through these challenges all together. Thank you very much.
Thank you very much, Ekpo. Very insightful presentation, a lot of data from there. I think some of the things I've gotten is the need for having projects to fund, the need for data. Data is really important to be able to guide that transition. There's also the reporting, and there's also the policy initiatives that will encourage companies to begin to, drive their, begin to come up with strategies and how they will begin to transition to the net zero world, which is really important. I think in Nigeria, while we have the regulatory framework, what we've seen is a lot of companies have really not gone on that train to be able to, transition their businesses and be able to tap into the available resources and the financing available to help us meet our climate goals and achieve our agreements under the all our indicators under the Paris Agreement. And so at this point, I believe we'll have more discussions during the panel session, which is what we're about to go into now. And at this point, I'll be handing over to the moderator of the panel, which is Omobolanle Adekoya. Omobolanle Adekoya is the head of the capital market and accounting advisory business in the West Market area. She's also the transformation leader for PwC in the West Market area as well. And she will also be introducing the panelists for today's event. And so after now, you will hear from me again, and you'll hear from Omobolanle to the end of the event. I just want to keep encouraging us. So please use the chat box to put in your comments, to ask your questions. We want this webinar to be as interactive as much as possible. So please ask your questions and put in your comments in the chat box. Thank you very much. And now I'm handing over to Omobolanle. Thank you.
Thank you, Elizabeth. I'm hoping everyone can hear me. Great session so far, and thank you to our guests for joining us today. We do have a full house as well. The truth about it is that this is something that we all need to pay attention to, and I really like the way Ibukun sort of also structured some of it around sort of action points for us, because we need to sort of do that. So before I introduce our panelists today, just a few things I want to say. The first one is that we have some questions already for our panelists, which we're going to sort of run through. However, we do want to hear from you. If there's specific things that you need clarification on, please, please, please post it in the chat. We will try and get to it as much as possible as well. So, and then at the end of course, we like to hear about feedback. So we'll also be posting some feedback questionnaire from you, because one of the things, that we as PwC, we like to deal with the important things to solve important problems. And, the ESG webinars that we've been doing is a critical part of it. So just to go over now, I just want to introduce our panelists. We've already met Ibukun Adebayo, who's the Group Director of Sustainable Finance Investment Strategy at the London Stock Exchange Group. He was introduced earlier on and gave us that wonderful presentation. Our other panelists, the next lady I would like to introduce is Tosin Ajose. She's the partner and lead advisor at Deal HQ Partners. I'm sure a number of us know that they're doing a lot of great work in Nigeria at the moment and the West Market area. Tosin Ajose is a business lawyer with over a decade experience. She is an astute public speaker and an IFLR ranked leading lawyer in financials, restructuring, and the capital markets. Tosin is a partner, as I mentioned, and they focus on Africa-focused transaction advisory, firm in Lagos, Nigeria. Tosin was also recognized at the Nigerian Legal Awards in 2018 as one of the 40 under 40 lawyers in Nigeria. And in 2019, she was named the African Woman in Real Estate by API South Africa. She is ranked as a highly regarded capital markets and financial restructuring lawyer by the IFLR. And also, when it comes to who's who of real estate, her name comes up. She's a member of the advisory board of the African Pro-Tech Forum and a member of the SEC Committee on Market Infrastructure and Commodities, and also volunteers with the Presidential Delivery Unit for the Federal Republic of Nigeria. She is the co-founder of the Learning Hub Institute. Some of us will know about them, a leading training institute. Tosin is a member of the Institute Director of Nigeria and also sits on the board of 3 indigenous Nigerian companies and 2 not-for-profit boards. So please welcome Tosin for joining. Thank you, Tosin, for being with us today. I'm looking forward to hearing from you. Our next panelist is Emmanuel Etadehe. He's the Executive Secretary of the Financial Center for Sustainability Lagos. I'm sure some of you would have heard of the FCS4, and he's the Executive Secretary of that, and they're doing a lot of great work at the moment. He's a Senior Vice President. He's a Senior Vice President at FMDQ. He also serves as Special Assistant to the Finance Commissioner, Delta State, and was Head of Financial Advisory and Economic Research at Financial Derivatives Company Limited. He also worked as Acting Head, Strategy and Chief Economist at Unity Bank, Nigeria. Mr. Etadehe has been involved in development of Nigerian capital markets since 2015 and set up the FMDQ Debt Capital Markets Development Project in collaboration with the World Bank, the International Finance Corporation, and the SEC to rally stakeholders behind the growth and development of the Nigerian capital market. Welcome to you, Mr. Emmanuel. Great to have you here with us. We also have, so one of the things that we also try to do is to bring together, so apart from the regulator side and advisory side, we also wanted to bring potential issuers and issuers. So today we are going to also have, a representative of one of the issuers in there, and his name, Benga Sherif Adeleke. Benga Sherif Adeleke is a banker. He works for Access Bank. As you know, they were the first to issue the first green bond for Nigeria. He has over 18 years cutting-edge experience covering sustainable finance, risk management, investment banking, project finance, and banking operations. He is currently the Group Head, Environmental and Social Risk Management Unit with ESG responsibility covering Access Bank Corporation and its subsidiary. He is passionate about environment and the environmental protection, impact investment, climate change risk, the Paris Goal alignment, renewable energy finance, the circular economy, and innovative products designed to meet the fast changing funding needs of the contemporary world. Benga was responsible for the issuance of the Africa Premier Corporate Green Bond, like I mentioned earlier on, which is certified by the CBI and verified by us, PwC. He's a chartered accountant and a chartered banker. And, we're happy to have him here with us today. And the last person on our panel today is Chidozie Uriel Ezike, doctor. So he's also a PhD holder. I love it when we have, because, the importance of this. Dr. Ezike has over a decade of banking experience and cutting across multifunctional areas such as risk management, economic intelligence and research, corporate planning, strategy, banking operations. He currently double hats as the head of environmental and social risk management and head of risk measurement department at United Bank of Africa, UBA. Some of his exciting achievements include in the ESG space, includes the establishment of an ESG department in the UBA group, also developing the framework around UBA sustainability finance framework, and also developing ESG's reporting. So there's a lot of work that has gone on that he has been working on. He has participated in bilateral funding arrangements with organizations like the DEG, Propaco, AFD, AFDB, SUNREF, World Bank, IFC. So there's quite a lot of things. So hopefully through the various questions that we ask our panelists, we'll be able to sort of deal with certain areas. So today I would actually like to start my question with Emmanuel. Emmanuel, are you here? Great to see you this morning.
Thank you very much, Omobolanle.
Great to see you this morning.
Good morning.
So the question I have for you today is really about some of the things that you are currently doing. So we all know, we've all sort of heard about the mandate of the FC4S. And I know that, the FC4 has a mission to accelerate the expansion of sustainable finance in Nigeria. So how is that going? What has been achieved so far? And what role has the capital market played in this expansion? So, a lot of people would like to hear what's going on in that regard.
Thank you very much, Omobolanle, and good morning to everyone on the call. And nice to be on the same panel with great people like Ibukun, Andrew, Uriel from UBA, and Benga, were co-travelers in this space, and all the other great speakers that have been introduced. As mentioned, the Financial Center for Sustainability Lagos, it was set up through the efforts of capital market stakeholders led by FMDQ, PwC, Lagos Business School, Chapel Hill, a number of other institutions, SEC, PENCOM, DMO, they're all members of the FC4S Lagos. And it is part of the 39 member, 39 countries network that is headquartered in Geneva and is supported, driven by the UN, United Nations Environment Program, and has the key focus of actually driving the expansion of sustainable finance in the different markets where it is established. 6 of these FC4S membership or member units exist in Africa. Nigeria is the 23rd in the network. Our work is critically important to driving sustainability across the entire economy, and we support Nigeria's nationally determined contribution and the commitment to the Paris Agreement, and we are resolutely focused on also enhancing the achievements of the SDGs. So what we've done is to ensure that the first step taken was to build awareness in this space. One of the speakers mentioned the fact that people, planet, and prosperity is the key focus of all that we're doing. And the people aspect is so critically important. You can't do anything without people, but the people have to be aware. And so PwC and ourselves, right from the beginning of the COVID-19 crisis in 2020, embarked on a series of awareness creation, capacity building exercise to make people aware of the SDGs, of the impact of climate change on Nigeria through various webinar sessions. Creating that knowledge and awareness was very important. That base of insight and awareness was critical to, seeing how we can support the global drive to take temperatures down to within 2 degrees Celsius or 1.5 degrees Celsius, desirably above pre-industrial levels. And that has worked out and has created a buzz of excitement and activities in that space. But narrowing down to what the capital markets, what we're doing in terms of the support the capital markets can give and has given, FMDQ in particular, for instance, has set up the Green Exchange, which is focused on listing instruments that will help finance this transition. And that Green Exchange is in partnership with the Luxembourg Exchange, which is the world's largest green exchange. And apart from that, we also have the Nigerian Green Bond Market Development Project that we set up in partnership with Climate Bonds Initiative, UK, and Financial Sector Deepening Africa, Kenya. And the purpose is to catalyze the growth of the issuance of green bonds. And in more recent time, we are branching into blue bonds because, for example, the majority of the big firms or companies or the investments exist in Lagos. And we know that from the topography of Lagos, Lagos can be called a small island nation, just like Seychelles, and it's exposed to the challenges of rising sea level. It is actually known that Lagos, along other cities like Miami, could sink in the next 30, 40 years. And so imagine if all these investments that are here go underwater, what will become of our future? So we've set up, we did this partnership with FSD Africa, Kenya, and CBI to drive awareness. And so far, what we achieved within the last 3 years of the program was to support the issuance of about 5 green bonds, including the Access Bond, which you mentioned, North-South Power, One Watt Solar, and also the 2 sovereign issuances from the federal government. We've done 10 capacity building sessions in the first 3 years, 5 focused training sessions. We've mobilized 32.83 billion naira of corporate green bonds from the capital markets, and we've trained over 928 capital market stakeholders, and not around 18 bilateral engagements, and also in terms of issuers, as I mentioned, there are about 5 issuers that have come, or 5 issues that have come to the market from about 4 issuers. And we are supporting and driving more green bonds and building out new products, even though Ibukun says we should focus on the basics, but for special situations like that of Lagos, which is like Seychelles, and is subject to the challenge of rising sea level, I think a blue bond is appropriate, and we're trying to support the state on that. Even at the federal level, we're trying to address issues like water, sanitation, and hygiene, and the fact that we are the worst country in terms of open defecation, but also issuing supporting the issuance of a blue bond. And in recent times, we're talking about things like pink bonds that could focus on gender equality, and also we're looking at driving social and sustainability linked bonds. Those are some of the products that we're trying to push out. But apart from products, in line with what Ibuku had said, we're also strongly involved in coordinating the policy space. So we supported SEC in the socialization of the Nigerian Sustainable Finance Principles, and in terms of the awareness session. And our structure as FC4S has all the key regulators and policymakers as part of our board and part of our membership, and we're helping to support the messaging and the knowledge building and capacity building in this space. Thank you.
Thank you very much for that. And it's good to sort of hear that a lot of things are going on, because one of the issues that we sometimes have, people don't realize there's a lot of things going on in this background and the opportunities available for them. So we wanted to bring that to highlight. And so my next question actually is to Ibukun. Thank you very much for your practical presentation. And as you already talked about in the past few years, the various collaboration that's going on amongst policymakers, on matters related to sustainability. Of course, ESG reporting is one of those areas, as well as responsible investments that has been increasing. Data show that we are approaching a convergence that places sustainability at the center of the world economy. We all know that investors are increasingly communicating the need for greater disclosure and transparency. As you are aware, the ISSCB have come out. They reformed, some of these rules that they brought out, and they brought out an exposure draft as well around sustainability and accounting standard. But then there's also the performance and social issues that come out of it. What role does exchanges play in this shift to encourage responsible investment and promote better business practices within the capital market? I know you gave a few action points, but I think we need to reiterate about the role that exchanges play, because without them, what can we do? So Ibukun, please I know it was a long-winded question, but it would be good to hear your thoughts around it.
The most overused phrase in 2020 and 2021 and 22, I suppose. Well, and I thank you for that question. So the answer very simply is that exchanges have a massive role to play, and whether exchanges are sole market infrastructures or if they hold a regulatory function, it's a key responsibility. I think as exchanges, we have a duty bound to not just convene capital, but to enact on the stewardship role that there is behind that. So ultimately, presenting ideas and innovation is key. And from our perspective, we see that over a period of time, the shift towards these mandates are such that you need to provide investors with the right platform, and you need to provide essentially corporates with the right platform as well. And what do I mean by that? So today there's a huge challenge around data and the veracity of data. Is the corporate governance score issued by S&P equal to the one that's issued by MSCI? Does my ESG rating under Sustainalytics meet the one that is under the London Stock Exchange Group? So all of that becomes more consternation for investors, and all it does is stop investment from flowing into the corporates. So there must be between exchanges a very, very deep understanding of the existential nature of this challenge, and not to frighten everyone, but ultimately to say, let's come together and do something about that. So some of the overarching organizations have been doing that. So to your point, ISSB has been set up primarily to standardize ESG data across all of the various sort of standard setters, so whether that's CDP, whether it's the SASB, or whether it's the GRIs. So that's good. That's one thing. IOSCO is also, so that's the International Organization for Securities Organization. So the members being SEC in Nigeria's case, FCA in the UK's case. That organization has come together to say, okay, so for exchanges issuing corporate governance scores or green economy marks, let's have a basic line of understanding together. So my message, Bolanle, is really around exchanges have to collaborate because this problem is too large. My role at the stock exchange now is to ensure that there is collaboration and that there's partnership to solve industry-wide challenges, as opposed to necessarily competing at the low end. As exchanges, we can compete at the higher end. FMDQ have a very liquid secondary market for debt. The Nigerian Stock Exchange, arguably, is more liquid for equity products. So let's get the exchanges to work to their strengths, but let's have a pre-competitive environment where we're encouraging investors and corporates to do the right thing. And then ultimately, as exchanges, let's compete at the higher level on the analytics, on the other things that as different exchanges we bring together. And that's the same thing in Nigeria as it is with us competing, for example, with the likes of NASDAQ, NYSE, and the Hong Kong stock exchanges too. So that's my point there, but I'm sure there'll be other material points that will come out in further questions, just not to take up any more time. Thank you.
No, thank you, Ibukun, but I'm still actually going to just tag on to your question. So we have talked about the exposure drafts that have come out with the SASB. Do you think that's going to be a game changer from what you're now seeing? Even though it's still at exposure draft level, do you think it's going to be a game changer from what you're seeing?
Bolanle, I don't have a crystal ball, and I'm also very, very bad with predictions. But what I can say is that it's great that at last there has been some attempt to bring and converge these standards. It is a veritable alphabet soup. When I first looked at this area, which was probably about 9 months ago, it took me at least 3 months to understand all the acronyms and to understand the differences in terms of the standards. And my head was hurting, I'll be frank with you. It was a very, very laborious and difficult exercise. But what ISSB, and for those of you that aren't familiar with it, it's a collaboration between the IFRS Foundation and a number of other standard bodies to, in the same way that they did with IFRS, so International Accounting Standards for financial reporting, to do the same thing for sustainability-related financial disclosure. So that is everything from your Scope 1 emissions to your gender policy, to your toxic spill wastes, to your corporate governance scores. It's bringing it all together under one global standard. The issue we have, Bolanle, to your question, is that there are different cadences across the globe in terms of how quickly these measures and these standards can be adopted. So, for example, in the US, until just March, the US didn't have a specific policy around mandatory non-financial sustainability disclosures. They do now, but it's still not anywhere near aligned to ISSB. In Europe, we have a charge under the EU taxonomy to develop our standards around that. That is more advanced than the US or anywhere else. But again, the Europeans will claim shall we say, jurisdiction over that. In Japan, there's a body called the Japan TCFD Forum, which is just bringing in TCFD regulations there. So it's all at different cadences. So what we run the risk of with ISSB is just introducing a fourth standard, which companies now don't know whether they comply with GRI or with ISSB or with the other ones, that in the attempts to try to simplify things, they may create more problems. And the other risk, and this is my last negative, the other risk is that there is no reason why countries have to adopt ISSB for sustainability. I'll give you a classic example. When IFRS was issued as the way to disrupt the issues around financial reporting many years ago, most countries adopted it. The US, the largest economy in the world, didn't adopt it. And still to today, they use US GAAP. The same thing could happen. It becomes slightly political. And so for that reason, we are, as a global exchange, at the forefront of trying to reduce these issues for corporates by almost saying that, listen, corporates, come and put your data in a central repository that is owned and managed by all the exchanges globally. Let's not compete on the data and where it comes from and how it's good. Put them in the various different under the various different standards, and then allow investors one single point of access in order to take the data and make their investment decisions. And the investors can take a decision on whether they're using CDP data for Scope 1 or GRI data for Scope 1 emissions. That's my point there.
Thank you, Buku, and thank you for being candid. The truth about it is that a lot of people have the same sentiments around it, so it's not unusual. So that leads me on to Tosin. As an advisor in this sense, we've worked on a few deals together, and I know it's a question that comes up quite a bit. And and when it comes to sort of ESG practices and companies sort of trying to disclose or claim that they are following and adopting these standards. As an advisor, have the disclosures from what you've seen, have they been beneficial? Can they be corroborated? How are you finding, sort of those challenges, some of the questions that you're being asked by institutional investors? Tosin, you're still on mute. You're talking, but you're still on mute. Can you hear me?
I'm so sorry.
Okay.
Good morning, everyone.
Good morning.
Yes, and thank you, Bolanle, for the question. So I was saying that because we sit as legal advisors in the market, I would like to take a more macro approach to answering the question. So we don't only advise capital market clients, we also advise clients that seek capital from private sources. So I would say that generally, my personal view is that the only thing that is better than good returns is good returns that is layered with an impact backstory. So there's definitely, a good incentive for us to be talking ESG and the impact on, capital flow at this point in time. Now, in the Nigerian market, what we have found is that a lot of deployment of domestic capital is not necessarily driven by any of these ESG principles. And that gives us, a lot of, issues that we need to be talking about. A lot of investors in Nigeria are primarily going to take investment decisions based off of returns, as opposed to a broader view of, social and environmental impacts of the entities that are either issuing this instrument or that are seeking, capital deployment. However, based on all of the conversations that we have said, that we've been having, we know that if anyone is looking to consistently, access global capital, then you need to be playing along the lines of, taking your ESG and sustainability policies seriously and implementing them in your governance direction, in your processes and principles as organizations. So what we are seeing is, on the more macro level, a lot of organizations that are looking to comply with ESG principles, just because it seems like a buzz and what everybody is doing. And this impacts the commitment of leadership, corporate leadership, and the commitment of other stakeholders to ensuring that there is consistent growth in ensuring that these organizations are meeting, the strategies and the targets that they have set for themselves. So it makes the work of an advisor a bit difficult because on the one hand, you are drafting policies for organizations, but it's hard to tell whether there is any definitive commitment to ensuring that, there is progressive growth in terms of, hitting the mid to long term, the mid to long term strategy focuses that we have. And I'm also happy that, we've had, deliberate conversations around reporting standards, on the conversation today, which is one of the issues that we find. I think as a country, Nigeria has taken a more principle-based approach to regulation, whether it is amongst the regulators or even exchanges and capital trade points that operate within the capital market or the Nigerian space. Everybody is allowed to determine the level at which they want to comply, how they want to make impact. And so it makes it difficult for an advisor to take, a standardized approach to reporting. What you have to do is to always tailor in line with the expectations and the requirements of the clients that you are, advising. So many times we're not able to take a broad, holistic approach to, standardized reporting or even adoption of, more standardized reporting frameworks. We have to do things that allow us to take the clients at their own pace. And of course, in the market, it's very clear that it's difficult for you to benchmark impact. One of the things that we need is to have a transparent basis for determining who is doing what. And I'm happy that, when Ibukun was speaking, he was talking, about also incentivizing corporations to, drive, compliance as is done in other jurisdictions. There isn't so much of that, happening locally. People would, comply because maybe they are trying to position themselves, effectively as a brand, or they're looking to, in the future, raise global capital, and then, it becomes imperative for them to be able to do that. I think that the narrative that we should be driving as a country is that every single person is a stakeholder in trying to drive Nigeria's net zero policy, whether you are an individual. I mean, I remember when Rukaiya was talking and she was alluding to the fact that, domestic contribution to carbon emission is many times, ignored in the conversation. What are we contributing in our homes? What are we contributing in our offices? Why should we be driving the conversations from financial instruments and bonds, green bonds and blue bonds and all of that? Why not have a more holistic conversation where everyone knows that in one way or the other, whether it's Bolanle or Ibukun or Emmanuel, each of us is somewhat or the other contributing to, carbon footprints globally, and that we have responsibilities both as individuals and as corporates to ensure that, we are taking responsibility and looking for ways. And some of these things may not even be as major. So one of the things is, we make a complex case for driving our net zero policy, but there are simplified ways that everybody, should begin to think about. And that's the direction that we take as advisors, as an organization. Your energy transition does not mean that, in the next 5-10 years, you're not contributing anything to carbon emission, or that you're transitioning to, completely clean, energy sources. What are you doing in terms of even managing resources, ensuring that you're not, over, leveraging, the energy sources that you have that are not clean? Do you take little responsibilities like ensuring that, you are energy efficient? Do you take, little responsibilities like ensuring that you clean up the environment when there's effluxion that happens in the process of your production? How aware are your staff in terms of processes, especially the ones that are not C-level, mid-level to low-level? How aware are they about the impact of, their regular everyday actions on, carbon emission and all of that? These are some of the conversations that I think that, at this point we should be having, and regulators and those of us that work, in the capital market, whether as advisors, whether as investors or as issuers, we need to start looking at the little wins and the low-hanging fruits that we can begin to deploy that helps us, take a quicker and a faster journey to net zero.
Thank you. Thank you for that, Tosin. There's a lot there, and I'm hoping that people are taking things away that they should be doing, so action points. And that sort of leads me to you, Benga, as the first certified issuer. I know that you were greatly involved in that when Access issued the 2019 green bond, at $41 million. And I also know that you've just closed another deal with the Reg S at $50 million. But it'd be good to hear from you about the use of funds. What has been the scale of impact on the green bond in enhancing sustainable development outcomes in Nigeria? And when looking at yourself as Access Bank, what lessons can you give to other people about environmentally friendly projects that can support decarbonization and improve sustainable social economic outcomes for the nation?
Yes, thank you very much, Omobolanle. Thanks so much to PwC as well for putting this together. I would just like to start. I've heard about a whole lot around the blue bond, the green bond, the social bond, and the likes. And there's no better time to enhance this conversation than now. So either of these bonds, as the case may be, but specific to green bond, they offer unique opportunities to catalyzing Nigerian transition to climate resilient, to inclusive, and to sustainable economy. There are a whole lot of funds hanging across the globe, hundreds of billions of dollars that are being channeled to drive net zero, carbon neutral economy, and the likes. So the bond in specific speaks to transparency, speaks to sound integrity of the critical stakeholders within the universe of the instrument issuance. And the key thing, why it is very, very key in this case and offers a significant impact, speaks to the taxonomy that Ibukun noted earlier on, a whole lot of governance structures around it, the 4 pillars of the instrument issuance, which speaks to the use of funds, the management of that fund, a whole raft of disclosure obligations that come with it, the reporting element, and the third high angle to it. So unlike where you spend billions of dollars on, let's say, energy, for instance, and somebody will be asking, where is the energy? So this is totally different, because as you are doing it, there are standards, international gold standard that you have to follow, and you are not doing it alone. You have other stakeholders, the likes of PwC, any of the big 4, and quite a number of other stakeholders that will be matching you word for word with some governance documents, with the stock exchange, for instance, and so on and so forth. I will not go too far into that because it has actually done justice to it. We all know about climate change, the significant threat to humanity that comes with climate change, the global warming, the social issues, the need for us to operate within 1 to 1.5 degrees Celsius for us to have a world that is sustainable. And we know about what is being spoken to around where are we today? We're hovering around 2.5 to 3 degrees Celsius, and we are all clear that Nigeria, even Lagos to be precise, may go into extinction. Emmanuel spoke to that, may be submerged by water. So the Green Bond Standards, the taxonomy, helps a whole lot around this, and quite a number of projects that could be funded with either is green bond that that we're talking about, or is blue bond. I will speak straight to Access Bank's green bond. This is 15 billion naira, $41 million to be precise. That was the premier bond issued earlier on, centered on 2 critical climate angles: climate change adaptation and climate change mitigation. So a part of this facility, the instrument was issued for what is called the Great Wall, which saved the Victoria Highland, the Lagos mainland, this Lekki axis against water inundation. At some point in the past, there were a whole lot of physical displacement, a whole lot of economic displacement. Almost all Nigerian banks are located in, their head offices are located on the highland. Some people that had businesses, assets, fiscal assets, and so on, were almost selling their assets at a peanut, because the ocean kept coming, surging in, and all this affected several businesses at that point in time. So the facility was used for flood defense, and it was meant to mitigate these menace. I just call it that. And the second part of the facility was for renewable energy, solar asset financing, which has significantly helped to mitigate a huge chunk of vulnerabilities that came with climate change. I will just quickly go to the impact. For the flood defense, the area protected by the instrument, approximately 900 hectares of land were protected against flooding. And of course, to contextualize it, if you're looking at football fields, about 1,400 football fields is approximately that 900 hectares of land that I mentioned to you, everyone. So I'm taking it to individuals, the people working in entities across the Victoria Island, the Lagos Highland, Lekki Peninsula, and the likes, some up to 400 beneficiaries that were positively impacted by the projects. And the renewable energy element of it, approximately 200 megawatts of solar PV energy, and 12% of and that sums to about 12% of the proceeds that was used. So the installed capacity of the solar was 21,460 megawatts, and that powers approximately, let's say, 40,000 Nigerian households. This is for the first leg. For the second instrument that we just issued, there are quite a number of other projects. This is relatively new on board. The experience that we've gathered over time from the 3 to 4 years of the maiden green bond that we issued has also helped us to develop quite a number of credit products, largely renewable energy, waste to switch to solar. That's the brand for that product. We also have another one for waste to wealth, and we also have structures around green building, energy efficiency, retrofitting, and the likes. And we're also partnering with other stakeholders around electric vehicle. You'll be hearing a whole lot about this in a bit. Let me pause at this point for others to have the floor and questions as we move.
Thank you.
Thank you.
Thank you very much, Gbenga. That was very, very insightful and informative. And one of the reasons why I asked you that question was because there was also a question on the chat that was asking about how do you deploy the benefits of green energy, at the base level, and the fact that they see the cost of conversion is high due to low earning power in Nigeria. How do you think this is practical in Nigeria? Because the truth about it, a lot of people say that, but we have to start from somewhere. So there are a lot of these projects that are happening, and over time, as there is a foundation, over time, things will get cheaper. And then what you have is that as the supply increases, the cost will, sort of go down, and also the cost of conversion will eventually go down. But we need to start something, because there are more, if we don't, we won't be able to succeed. And then before I come to you, Chidozie Uriel, thank you for being patient. There's one more thing I just wanted to mention, was about data. So, from a lot of our panelists and some of the discussions, we've heard about the fact that there is a repository of data somewhere. And the truth about it is that investors do have access to this. So even if we comply forcefully or not comply, people are making judgments about your businesses, about your organizations, about what you're doing, and they base what they give you with regards to capital availability and investment and perception on these. And you'll be surprised that if we don't put those structures and processes in place, we will not be able to access this over time. So over to you, Chidozie Uriel. Thank you very much. I know that UBA, you have started your journey, and there's a number of things that you have started putting in place. And so just sort of specifically from your point of view, what have you done continuously to prepare you for the next stage? I know that that you are sort of in the process of looking at whether you can sort of issue yourself, the green bond, and also sort of looking at some of those initiatives. It would be good to sort of hear how you have prepared to get yourself to this level, and to be able to comply with the next stage of you raising further capital around these initiatives. So from UBA's point of view, and what are you doing?
Yeah, thank you very much, Bolanle. Good day, everyone. Thank you for this event, and I think it's very thoughtful to put this together and have this kind of panelists be party to the conversation. Yeah, so as you know, that UBA is a global brand, and we have presence in over African countries, and also in 3 key financial spaces, or should I say environments, and we just included Dubai to that list. So that means that the conversation around ESG and sustainability is critical to what we do. And what the way we look at this basically is the fact that we must know where we are before we begin to jump into the conversation of saying we want to be net zero, or we want to be whatever issue, anything, in order to have a full understanding of what is really critical to the markets that we play. Again, let me quickly say that banking is about financial intermediation, and that intermediation will continue and would never change. So what is very important here is to say, what is the need of the market now? What will it be tomorrow? And how are you going to respond to that? So like Rukaiya had stated, with a few statistics that I jotted down very quickly, and that is because those statistics are very central to some of the things we've been doing. She highlighted that over 80% of the electricity generation in Nigeria is from diesel generation, and that about 31% of energy consumed in Nigeria comes from oil. I mean, that simply explains why the banking books and the loans we give in Nigeria are highly concentrated to oil and gas and etc. And let me just add additional to say over 70% of government revenue comes from this fossil fuel that in the future will become the forbidden fruit, right? And if you look at the Nigerian banks, more than 34% of all the Nigerian banks' exposure is to this forbidden fruit. And that is the fruit we call the transition sectors. And these are the places that my bank currently play at, right? And that is the bedrock for the existence of my markets economy. So what we have done with our net zero trip is to have ambition. So we have 4 ambitions that we have highlighted. So the first ambition is to ensure that in our own practices and operations that we are net zero. And that should include our supply chain, at least by 2050 or sooner. But that is an ambition. And I will quickly highlight why it is an ambition. But it's good to have an ambition first. So what we have done to try and check how that ambition will be met is to try to have conversation with people that should know. So we are talking to PwC, as you know. We are talking to a few other people, as you already know, on how to even help us make sense of where we are today so that we can baseline properly rather than jumping the gun and going into something just because it's the wave of the moment and people begin to get greenwashed just because you want to comply with the conversation of the period. So the second ambition for us then will be to align our finance emission to achieve that net zero conversation. And I said, financial intermediary is the job that banks do. So we need to know that we finance most of the emissions out there. And we are working to estimating the level of our financed emission. So we are a member of some organizations that help with methodologies and approaches to getting that done. But we are also speaking to experts that should really know how to estimate that because data is king as far as the United Bank of Africa is concerned. We want to be very clear and thorough as to what we are doing. Now, the third ambition is supporting our customers, and that is the heart of the conversation for us. So we have set up what we call the customer first strategy. So the customers first. Is it in your activities? Is it in your future sustainability activities? Is it in the products that you're developing? And we know that some customers may not have the capacity to, on their own, run through the sustainability journey by themselves, but we want to give them products and support as well as investment that will help them, go through that path and achieve a comprehensive and fair, as Emmanuel has called it, and also as Rukaiya has earlier said, fair transition. And I love what Tosin said, that it is not just about the big organizations having the conversation. It also has to do with the individuals. So, and that is why for us, our fourth ambition is to promote new climate products or solutions. And that includes even personal and consumer credit, as well as consumer financing. And the idea is to take the conversation to the minus or the lowest point of the value chain, if I may use that word. Because I'm truly in love with what Tosin said, that the lowest or the least of the participants in the value chain should contribute so that we can have a wider and a more inclusive conversation. So those are our four ambitions as far as our net zero transition party is concerned. And we are diligent about that, and we are very, very clear about the future. If you look at the International Energy Agency's net zero pathway for 2050, they have clearly made the case for us that gas demand would decline by about 55%. And imagine if that happens, it simply means that it will be coming down to around 1,750 billion cubic meters. And that will have a very direct impact on the source of income for at least the Nigerian market. And they also said that we should imagine that oil would decline by about 75% to around, say, that is oil demand declines by about 75%. So if I use the 90 million barrels per day of 2020, it means that will come down immediately to around 20 million barrels per day. That is going to be a calamity for the Nigerian economy, because revenue, just back revenue, just reduce the Nigerian foreign income by 75%. You know what does to your loan book? it means that your public sector disappears, becomes non-performing instantly. And also, over 20% of the Nigerian portfolio becomes non-performing. And non-performing under IFRS 9, just like Ibukun has said, that we use here for our own accounting, it means that everything moves to stage 3, and you have full provision, and your capital erodes. And you don't want that to happen to you right now in Nigeria, where you have just been introduced to Basel III, and your capital adequacy, the definition of your Tier 1 capital has changed or has been modified. So it is a comprehensive view for us at UBA. And as a global player, we know that it is something we should take seriously and not just, talk about it because it's in fashion. Thank you very much.
Thank you very much, Udozie, for that. And thank you for some reality checks as well. I just wanted to say thank you as well to our participants for still staying with us. We're going to round up in about 10 minutes. We do have about two more questions that we just need to sort of go through from the chat. This next question is actually to Ibukun, and it's slightly controversial, but I think it's an important question that we need to sort of address. Okay, we have one more question that's come through. So the question to you, Ibukun, is that in the context of ongoing negative pushback and necessary maturing of the ESG capital markets, in terms of your 3 policy-related steps, how critical or constricting will the political and national context be to the ability of a recognized and credible domestic green corporate of FI-raised medium-term green debt? In a sense, with all the things that we're trying to do, how is our political and national context going to sort of affect it? Or should we just ignore it and sort of push through? Because we know that there's a lot of time regulation affects a lot of what we're doing.
I remembered just on time.
Okay, great.
Yeah, and thank you to, I think it's Douglas that's posed the question, but before I do that, just to say congratulations to Wenga and also to Chidozie as well. I just think it's great to have the issuers on this panel, so they are the users of capital and therefore the exponents of what we're doing. And if it's going well with them, then what we're doing as exchanges and regulators and advisors doesn't go to vain. So congratulations to both of you on that. So the question that was posed, so it's one of those things. It is absolutely imperative that government regulators take this absolutely seriously, because the issue is that the challenges that we've mentioned, the quantum of capital that we've mentioned, will just not be mobilized in this direction to Nigeria if we don't. Let me just give you an example. The green bond issuance last year in 2021 was around about $500 billion. It was another record. We reach records every year, global green bond issuance. About 80% of that green bond issuance happened in China, the US, and Germany. Yeah. It's not that green bond money is going to everywhere. Access Bank were fabulous by getting access to capital, but it was probably local capital, correct me if I'm wrong. But the quantum of the challenge is $100 billion per year for Africa. That is not attainable by local investors. You need global investors to come in. So if government doesn't recognize that, or there are political speed humps that they need to get over, they need to do that very, very quickly. The point is if you can attract global capital, you meet the standards of that global capital, as Tosin mentioned, then you give yourself a proper share of voice, and you raise standards, you raise capital, and you provide for the population, particularly in relation to energy production from clean sources, which is critical for Nigeria as we move forward.
Thank you. Thank you for that, Ibukun. I don't know if, Emmanuel, you want to add anything to it? To that?
Yes, you read my mind, Omobolanle. Can you hear me? So, can everyone hear me?
Yes, we can.
Okay, great. So I just wanted to add another dimension to Ibukun's very, very well put together contribution. In terms of governments and the political will and the impact of policies, I think Nigeria is touching all the right chords. And that's because of the Amazon we have, the former Minister of Environment, Mrs. Amina Mohammed, who has championed this space. She's our Amazon. She's at the forefront of the drive to ensure that Nigeria is in compliance with the Paris Agreement and with all the international protocols on climate transition. So today, Nigeria has a Climate Change Act that was passed last year. Also, I need to mention the unwavering support of the British High Commission in Nigeria, the British government in Nigeria. They have been consistently supportive. They actually supported the move to get that bill passed. It was tried in the last Senate. It was stepped down, wasn't signed into law, but this Senate has passed it. It was signed into law. The one from before for the current Senate, they passed it last year. So we have the law. And without that law, you're not even there yet. You've not taken the right step. We have issued as a country, where I need to mention that as a country, our first sovereign issuance was certified by CBI. It was one of the first to be certified. So we should be proud of that. So we've issued twice, so we're a serial issuer as a country. We've inspired people like Benga and Co. at Access Bank to issue. We're inspiring Chidozie to come to the market. We've inspired North-South Power. One Watt Solar is a unique story. It's a pity he couldn't join this. He's a young man who was in banking and started the training about green bonds in Benga's office. Got inspired, left the banking sector, set up his own energy firm, and he has issued today. And he did a combined product. He did a sukuk and a green bond. So I call it a green sukuk, the first of its kind. The size is small, but I told him it's not the size that's important. It's taking the first step. We know you're going to scale up as you expand. So in terms of policies, we have the Climate Change Act in place. We also have in that Climate Change Act a provision for the establishment of a department or a body that is similar to what we have in the UK that can help us to really drive the climate transition and will be funded from both the government budget and private sector contribution, can raise capital on its own. It can also help us build out a carbon market in Nigeria. That's another space that's actually waiting to be exploited. And the guidelines are there. So we also deliberately and voluntarily upgraded our nationally determined contributions as a country and submitted it last year. That shows seriousness in joining the international move to transition to net zero. And we restated our target. We said that by 2060, Nigeria will be net zero. And we talked about the areas of emphasis. So if you look at that document, the revised NDCs, if you look at the Climate Change Act, we're doing the right things and we're taking the right steps. For SEC has come together with all the regulators under the Financial System Regulation Coordinating Committee, FSRCC. They've come up with the Nigerian Sustainable Finance Principles to ensure that listed entities report and disclose annually on what they're doing in terms of ESG, in terms of climate resilience, and even in terms of SDG. So we are doing the right things, but we need to do, apart from just having the policies and the laws, we need to be more active. We need to be more, practical in driving the implementation. I need to see more action coming from the private sector in taking advantage of these regulations, these policies that the government has come out with. And so what we did at FC4S, for example, within the pandemic was to do a banking sector review. We talked to Chidozie, we talked to Benga, we talked to Sterling, we talked to Stanbic, and a few of these banks came to open up their bookstores. And Chidozie is very spot on, Benga very spot on. 37% of the assets of banks is exposed to fossil fuel, and will become stranded assets if we're not careful. They are we did a review. It was sponsored by the Global Environment Facility and the United Nations Environment Program in Geneva. It took us about 18 months to complete the review. We hope to do a series 2. And until you begin to do such things and let the players like the Jewels, the Chidozie, and other players know that they're at risk, you will not see action being taken. So we're doing the right things. We need to do a lot more. And we thank God that we have the likes of Ibukun over there that can help us connect with the international markets and ensure that we're also onboarding those standards that we see are being revised and released. Every exchange in Nigeria, including FMDQ and the NGX, are part of the World Federation of Exchanges. And some of those draft documents also come to the exchanges to make their comments. I've made my comments. I've talked about that about the fact that we should integrate the local regulators' viewpoints and collaborations in drafting those documents so that it can be inclusive. I'll stop there so I don't take all the time. Thank you.
Thank you very much, Emmanuel. Thank you very much. And, just to say, a journey of 1,000 miles starts with one step. So we are in the right direction. So, I do know that there's a question here that sort of talks about how do you access the risk for companies in Africa not involved in ESG to lack of financing of their activities in coming 10 years. The truth about it is high, because if you do not sort of comply, if you do not sort of start working towards that, because at the end of the day, your business is not just about you. There are a lot more stakeholders that are involved, as well in that sense. And depending on where you're playing that, it is quite high. So that's important. So there are two more questions. One of it is quite technical, but I'm hoping that Ibukun's previous answer would have actually responded to that. And that was on the efficacy of carbon credits and their derivatives sold and bought on voluntary carbon exchanges. So the question is how to hedge against unintended consequences, e.g. water and soil pollution by metal toxins from operations of extractive industries such as mining and crude oil that are damaging to natural capital and are complex to quantify. So, I can sort of talk a little bit about the fact that, at the moment, you do have a number of experts that are doing a bit of modeling around these things to try and measure risk and impact. In addition to that, you do have a lot of data that are sort of shown trends of some of this impact that people are now using, and they're using it to extrapolate forward at the moment. And then the truth about it is that when it comes to things like fair value and quantification, it really depends on what people are willing to pay for it. So it's very difficult to sort of say about what the exchanges are doing, but there are a lot of things that are sort of going on at the moment with regards to that. And if you look at places in Asia, so you have Singapore, people like this in America, there's some benchmarks that are available at the moment that people are using. I don't know if you have any other thing to add around that and what you're seeing around the valuation and hedging that sort of you may need to do.
No, I don't think I have any more comments on that. It's a very technical question. I'd be very happy to answer that offline. But I think the point on carbon credits that I wanted to just ensure was picked up was this point regarding currently the inability for Nigerian solar projects, for example, to be eligible for carbon credits, where those solar projects are around the avoidance of carbon in the development of energy. And so, for example, Bengal's project with 200 million megawatts of solar today wouldn't qualify. And this is something that is an absolute travesty when a similar project, for example, in China or in Europe would qualify. For Africa now, it's no longer the fossil fuels in the ground that is our essentially our natural resource. Our natural resource now is access to low-cost carbon opportunity. Let me explain that. To set up that particular solar project, I don't know where it was, would be significantly cheaper than setting up a similar project in Denver, Colorado, for example. Probably 1/10 of the cost, yet the 1 ton of carbon that's removed is the same. So you can argue that the price or the value of a carbon credit from an African project is significantly more for an investor, or worth more to an investor, than the higher cost option in the developed market. And that's what we should be focusing on. We should be focusing on how to extract value from our low-cost carbon access opportunity, particularly for global investors that are looking to offset their own global emissions. But Charles, I will come back to you directly on your question. I think it's probably just slightly too technical for this conversation, but thank you for posing it.
Thank you. Thank you very much, Ibukun. Okay, so we are actually done. I mean, I have to say it's been a wonderful session, and we truly, truly cannot thank our panelists enough for such a wonderful, insightful, educative, informative session. I mean, I know one of the things that you will find that a lot of people have a lot of things that are, they're taking notes. We've had some side comments. People have asked us to post the recording because they want to use it to capacity build as well. So it's something that's been very insightful. And thank you so much for the session. Ibukun, we appreciate you. Emmanuel, thank you for the great work that we're doing. We hope to see more of it and hoping and looking forward to more collaboration. Tosin, we've spoken and we know that there are more things ahead, and we're just really grateful. To Beng and Chidozie, we thank you guys for trailblazing, especially to Access Bank for what you're doing, and we are hoping to see more of it. For those of us who live on the Lekki side, I have to say that we are so looking forward to the effect of the Great Wall, because we know that we're currently underwater. So it's something that we're all looking for. We're hoping that more and more organizations will take that step, both internally and not keeping it, as I said, not just at the high level, but everyone. Is something that we all need to sort of take action on before it's too late. Thank you to Elizabeth, Rukaiya, and Andrew as well. And last but not the least, thanks to our amazing participants and audience for being engaging, for keeping the numbers up, and for keeping the energy up. We will share the slides to those of you who've attended, and what we'll do as well, we will post the recording on our website for those who want to refer to it, or you may want to refer others to it. The last thing I want to say, I'd mentioned earlier on, is that we'd like to hear from you. So we have a feedback link that's been posted in the chat. Please, we want to hear from you, because we want to do this more, and we hope that it's been useful. So please click on the link and do give us your feedback as well. We'll also send it with the final pack at the end of the conversations. So thank you, everyone. Have a wonderful day and weekend as well. Hope you're all looking forward to the weekend, and we hope for those of us on this side of town, and we hope that the sunshine Ibukun is experiencing, you're going to send some of that over to this side for us. It's been quite great for a while, so we want some sunshine, over this side. But thank you, everyone. Thank you, everyone. Have a great day.
Thank you.
Bye for now.
Bye.
Thank you.
Thank you, everyone.
Thank you.
Thanks, everyone. Bye-bye.
Yeah. Bye.